Hello and welcome, Finances, to another episode of the What the Finance podcast, where we talk to experts to help gain a greater understanding about what is happening in the world of finance, investing, and markets. So, on today's podcast, I'm happy to welcome Duncan Mavin, who's a former journalist for the Wall Street Journal and Dow Jones, and is also the author of the recently released book, The Pyramid of Lies: Lex Greensill and the Billion Dollar Scandal. So, Duncan, thanks for joining the podcast today.
Thanks, Anthony. Thanks for having me on.
You're welcome. So, I guess my first question is, what was your influence for writing the book?
Well, I got involved in this story quite a few years ago, actually. I was I was doing a lot of kind of not journalism stuff at Dow Jones. I was doing a lot of kind of strategy and management. I had been an accountant before I was a journalist. I kind of kept getting dragged back into kind of running the business and things. I wanted to keep my eye in on the journalism. And a longtime source came to me and said, have you heard this company, Greensill Capital? And I said, no, I've never heard of them. And they said, well, you should pay attention. They're either going to be, the next big thing, or they're going to be a disaster. And here's some documents that you might want to look at. And so I took a look, and instantly it was like, obviously there was something wrong with this company. And what made it really interesting was that it had a bunch of kind of high profile names backing it. So you sort of see a bunch of red flags and you see a bunch of high profile names. And as a journalist, your eyes light up.
But yeah, that's really interesting. So I guess, can you maybe describe what Greensill did? And I think a key thing that I saw throughout the book was supply chain finance is really their specialty. So I guess, can you maybe explain that and what it is?
Yeah. Yeah. So supply chain finance is sort of wrapped up in a whole bunch of jargon, but in truth, it's sort of fairly simple. It's essentially an fairly old method of financing. It's providing essentially loans to businesses to smooth the transactions between buyers and suppliers of goods and services. So typically, like a buyer of goods, let's say a big factory that wants to buy some parts for its whatever it puts out, it's going to pay the supplier 90 days or 180 days after it gets the goods, and that sort of suits the buyer, but it doesn't suit the supplier. And so supply chain finance is essentially kind of where banks typically insert themselves into that and say, well, I'll pay the supplier right up front, straight away, and I'll get the money back from the buyer later, and I'll take a cut of the deal. And usually it's like some small discount. And that's been going on for decades, if not centuries, in one form or another. What Greensill was doing was saying, well, we can do this more efficiently than the banks. We're better than the banks at doing this. And also, we want to spread this to more clients. The banks only offer it to a limited number of clients. So we're going to offer it to everybody. And the way they said they would do this more efficiently was, rather than use their own money, because Greensill Capital didn't have any money, they would sort of seek out investors. They'd come up with funds that would invest in this kind of transaction, and they'd go to investment managers and say, "Look, we've got this supply chain finance deal. Would you like a piece of that? And you'll get a share of the profit that we make." So in theory, it was kind of really pretty straightforward in some ways, just a kind of type of lending. The reality was that business is really not very profitable at all. In fact, very, very difficult to make profits. And the banks who offer it do it usually as a kind of loss leader for their big clients. So Greensill Capital was already in a business that was a bit of a struggle. And it turned out to be a real struggle for them.
Yeah, and because that's Lex Greensill, obviously the founder, and who it's named after. He was, I think, his whole career, for some reason he always thought, this is the future, this is the future, this is where I'm going to make my money. Because if throughout the book you mentioned how I think he went to multiple banks trying to build this sort of business within there, and never really worked. And then he decided to go out on his own.
Yeah, that's right. So Lex has this. Well, first of all, he's an amazing character, really interesting guy. Like he's from this small town in Australia, a place called Bundaberg. In fact, he's kind of from outside Bundaberg, and his family have had a farm there for generations, a couple of generations. And he always had this sort of this great backstory that explained why he was in supply chain finance. And it was just such a beautiful story. And, when you heard it, it's like hard not to buy into it. And the idea was, when he was a kid growing up, his parents were farmers, and they were producing watermelons and sweet potatoes and selling them to the big supermarkets in Australia. And the supermarkets didn't pay them on time. And that meant that his parents had always struggled, and part of it was like he couldn't go to university because they couldn't afford to send him there because they didn't get paid on time. So this had driven Lex to want to fix the supply chains. There's another version of the story, and with Lex Greensill, there's pretty much always another version of the story. But I came across people who told me a different version, right? So the version I heard was that actually after he left university, after he got his degree, he ended up in Sydney working for a guy who was already working on something like this as a sort of moderately successful and moderately well-known Australian businessman who had a business that failed, and he felt like it had failed because of supplier payments not being made on time. And so he was working on a supply chain finance business, and Lex learned a lot from him. As you say, he then went to work for Morgan Stanley, where he kind of tried to build up this supply chain finance business there. And, for a fairly junior guy, did incredibly well, was like one of the best paid people there, and was a bit of a rising star until it all went wrong. Like around the financial crisis, the business he built up became a bit of a problem for them because the bank no longer wanted to fund this business, and it was sort of stuck with loans, really big loans to some high profile names, some high profile clients of the bank. So he left Morgan Stanley. Then he went to Citigroup, tried to do something similar there, kind of fell out with some people there, and then eventually kind of branched out and did it by himself and used this model where he went to investment managers and said, if you give me the money, I'll do this for you. It was supposed to be, the Greensill Capital business was also supposed to be a very sort of tech heavy business. So he claimed it was a fintech. The reality again is different. There wasn't much tech. They relied a lot on third-party tech providers, and fintech was a real stretch. It was really useful in terms of getting a big valuation for the company, but it wasn't really what was happening there.
Yeah, when I hear his story, it's almost like it seems like he wanted to be like an empire builder. So he's always looking for that next sale, that growth. And then I think at the banks, it sounded like he was being held back almost sometimes because, like, hang on, this might not be the best financial thing to do. But Lex was like, no, I just need to continue to grow and sell and get more clients.
Yeah, that's a good way of looking at it. He's definitely like a super ambitious salesman. And so in the banks, there are kind of restraints around that, right? And there's, banks are not perfect, but they definitely have compliance and rules that stop people going too far. And rather than kind of tone down his behavior, Lex almost walks off in a strop, and goes to the next place until eventually he's kind of run out of banks and does his own thing. But yeah, he wants to be, he wants to kind of be the biggest thing in supply chain finance in the world. He wants to at one point he talks about wanting to finance every transaction in the world, which sort of tells you a lot about the level of ambition. People like you and I might laugh at that, but there were enough people who were like, wow, I want to get behind this guy. So yeah, the ambition is definitely a part of it, and empire building is absolutely right.
Okay, so yeah, so he ends up starting his own company, and then, as you said, he sold a lot of people, and I think it was, you said he sold a lot of the debt to other investors, but I think as well he got a lot of people to actually invest capital into Greensill and what it did. So, do you think they were mainly investing for him as a person?
Yeah, so Greensill is the backing for Greensill is kind of amazing, actually, right? So one reason he's able to do that is when he was at Morgan Stanley, he had met a guy named Jeremy Hayward, who was a very senior civil servant, and Hayward had worked for Morgan Stanley for a bit, gone back into government, and at the time, the UK government was looking for ways to be more efficient in the way it paid its own suppliers. And Hayward said, hey, I know this guy. It's this guy Lex Greensill. He's this young, ambitious guy in the banks. And so he'd got access to the UK government, and Lex kind of milked that, gave him a lot of credibility. And to the extent that he was able to hire David Cameron, the former UK Prime Minister, onto his staff. The backing he got so it was political. He had people like Cameron, but it was also, a couple of giant investors. And one of them was General Atlantic, this big private equity firm, which is renowned for being really credible, actually, and really thorough in its processes. In this case, they did a lot of work around Lex Greensill. And I think what happened was they said, well, this guy is, there are problems with him, but we kind of like supply chain finance. We like fintechs. We think this business could do with a bit more tech, and we can help with that. We think Lex could do with, a bit of guidance, and this is what we do. Like this is our business. We take problematic founders who are, visionaries, and we take them to the next level. We show them how to do their job properly. In reality, they couldn't control Lex. In fact, he was, he had the upper hand in that relationship. And the other big backer, and really this is where Greensill got sort of supercharged, was the SoftBank Vision Fund, which, anybody who's been following kind of tech and investing for the last few years is aware of the Vision Fund and their kind of disruptive approach to investing. This is Vision Fund 1, which is what invested in Greensill, was $100 billion fund, mostly money from Gulf states and from SoftBank itself. And they put money into Greensill, put a couple of $1 billion effectively in the end into Greensill on the back of a few weeks of due diligence. And that's kind of how they approach everything, right? And they've had some bets that really have paid off, and they've had some bets that have, blown up in their faces really badly, like WeWork. And, I think their view is, well, we've got $100 billion and we're going to take some bets, and some of them aren't going to work. And that's okay. The problem with that is, that kind of ignores the disruption they're causing along the way. That there were 1,000 employees at Greensill Capital who are out of work, and they're investors who've lost money because Greensill grew at this huge rate after SoftBank put its money in.
Yeah, unfortunately, it's almost like the kiss of death at the moment. Having investment from SoftBank, it seems like a lot of the companies are collapsing. So from reading the book, it seems like, Greensill, he goes out on his own. As you said, he raised quite a lot of capital. I think SoftBank, and a lot of that was a bit later, but then they continued to invest. It seems like from the start, he was probably making some poor decisions, and, he wasn't really making much money at all. I'm not sure if you can talk about that. So was it the fact that he, was the wrong management, or was it the fact that obviously COVID had a massive impact? What really happened?
Yeah, I think, as I said earlier, he was in a business that effectively wasn't very profitable. And so if you kind of look at supply chain finance, you take a little cut of these deals, and the banks do it and they take their cut. But for Lex to do it, he has to take a cut. The investors he's promised, some return to, they've got to take a cut. In many cases, he had to take out trade credit insurance, which is this insurance pays off if the loans default. He had to take that out because the investors wanted an added layer of protection. That they have to get paid. There's a whole bunch of people who have to get paid out of this tiny slither of a return. And so this relatively unprofitable business, in some cases, is literally loss making. And certainly to do it with big credible names who are, satisfactory clients, then for somebody like Greensill, it was unprofitable at best, loss making in many cases. And so in order for him to say, well, look, I have a business that's growing, invest in me, to people like General Atlantic and SoftBank, he then has to do something a bit different, which is, really not supply chain finance at all. It's just unsecured lending to a whole bunch of slightly risky, or more than slightly risky, clients. And he's been doing that, from the start. So some of those were businesses that just couldn't get any kind of financing from anybody else, often quite small businesses. There's quite a lot of them go wrong in sort of 2011, 12, 13, 14, 15. A lot of businesses that you invest in that don't work out the way they should have worked out. And so things start to sort of, already he's like baking in problems, even as the business appears to be growing. And there's a piece of Lex's personality that really comes into this. So he, never wants to admit that he's wrong. That's what I found from everybody working around him. And, he's incredibly bullish all the time. And so that is appealing to people like SoftBank, because they say, well, this guy's a founder and a visionary, and, he's going to shoot for the moon. But it's a real problem when you're talking about a banker. Maybe great for a salesman, but terrible for a banker, because when loans start to go wrong for Greensill Capital, instead of writing them off or acknowledging that they're not going to be paid back, Lex's first instinct is to double down and offer a new loan to the same person. say, well, you couldn't pay that 30 million. Don't worry about it. I'll roll it over. I'll give you another loan. We'll extend it. And hope that he never has to acknowledge that things have gone bad. So he's sort of baking in these problems for years and years and years. And that's really sort of the underlying problem with Lex. Now, there are like a couple of triggers that make the whole thing collapse eventually. One of them, the key one, is the insurance. Because he'd had so many of these problems along the way, actually his access to trade credit insurance was narrowing. There were a lot of the big trade credit insurers were saying, we don't want to work with Greensill Capital. We're not really sure we trust them. We don't understand what he's doing. We're just not comfortable with him. And so he ends up getting most of his trade credit insurance with this tiny Australian company called the Bond and Credit Company. At one point I met Lex many times. And one point I said to him, hey, Lex, you've got this multi-billion-dollar business. Why is all the trade credit insurance coming from this tiny, dozen-person business in Australia called the Bond and Credit Company? And his response was, well, they're Australian and I'm Australian. And I'm like, what? That isn't a reason to do billions of dollars of business with somebody, surely. But apparently it was. So what happens, the trigger is that eventually the Bond and Credit Company ends up being owned by Tokyo Marine, which is a massive Japanese company. And they find that they've got this massive exposure to Greensill Capital, and they say, we're not going to insure this stuff anymore. And so when that gets pulled, the whole thing kind of comes tumbling down. It's like a house of cards that just kind of collapses.
Yeah, I think during that period as well, they buy a bank, don't they? So I guess that was another way, because you think about supply chain finance, like how are these companies getting other loans? Yeah, it was done through that other bank, which I think was based in Germany. If I'm not mistaken.
Right. So yeah, he buys a bank in Germany. It's a bank that's like 100 years old. It's never really been very successful. Lex buys it for something like $25 million and uses it as a sort of warehousing facility. He actually said to me, it's a warehousing facility. So what they did was, if some of the loans weren't working out, he could just shove them in his bank, and then instead of them being exposed to other investors, they're exposed to the bank, which of course is like exposed to the deposit holders of the bank, which turn out to be a bunch of German municipalities who are not very happy when it turns out, they've loaned money to the worst of Greensill's clients. And the other pool of cash, we should say, is Credit Suisse, right? So the big fund that gets involved is Credit Suisse Asset Management. They provide their clients money to the tune of about $10 billion in the end to invest in Greensill loans. And they're still looking for a few $1 billion that they haven't got back. What are we, like 18 months since Greensill collapsed?
It's crazy to think. And I guess, someone who's been mentioned in the UK news quite a lot about this story, as well as in the book, is Sanjeev Gupta, who is quite an important person in Greensill and had lots of debt. He owns, it's a very complex web of commodity companies. So would you say he's almost like the perfect example of what a customer for Greensill was?
Yeah. So Sanjeev is, in many ways, the biggest, most important client of Greensill. There are probably two or three others, but Sanjeev's the best known and the biggest, I think it's fair to say. And similar guy to Lex in some ways, right? Like very charismatic, very salesy kind of guy, but also with a somewhat like mixed reputation. And so as Sanjeev Gupta was building up his metals conglomerate, which is buying up sort of assets that nobody else wants or can't make them work. Like Sanjeev goes around the world buying them up, mostly in the UK, but also in Australia, in the States, in Europe. As he goes around doing this, he's struggling for money, struggling to get any traditional bank to give him a loan. Nobody will do it because they don't really understand how he's going to make these businesses work. And so he comes across Lex Greensill, and at one point, actually, Sanjeev owns a stake in Greensill Capital for a few months. But they become pretty close. They spend time together on Lex's farm, and Lex goes to Sanjeev's parties in Sydney, and they become close personally, but professionally they're like entirely intertwined, right? Greensill is providing all the financing for the deals that Sanjeev is doing. And none of this is supply chain finance, by the way. Like none of this is anything like supply chain finance. It's big loans for multi-billion-dollar acquisitions. It's straightforward lending, but to a company that's really risky and can't get lending from anybody else. And so they become really, really sort of intertwined. These loans, by the way, are stuffed into the supply chain finance funds that Credit Suisse is selling to its clients, even though they're nothing like supply chain finance. So they become really, they sort of lean on each other, right? Like Sanjeev can't continue to grow his business without loans from Lex, and Lex's business, doesn't really have any big clients, maybe one or two others, other than Sanjeev Gupta, who are going to pay him any sort of revenue. And so the two they can't pull away from each other. And actually at Greensill Capital, it becomes an issue, at board meetings, it comes up all the time. What are we going to do about the Gupta businesses? And Lex will sort of, he'll answer honestly about the size of the loans and so on, but he'll always say, oh, don't worry about it, I've got it covered. And this is a real problem with Greensill Capital, is the board and the senior management, they're aware of many of the problems, but they don't do anything about it, and they sort of accept it when Lex just sort of says, "Yeah, don't worry, I've got this. You guys deal with all the other stuff. I've got these problems." Well, he didn't have them sorted at all.
Yeah, they didn't rate him in. So if we look at when, I guess, everything starts to crack and fall apart, would you say, I guess 2020, around that period after COVID, would you say that was the big influence? It was COVID, and then maybe there was more analysis of actually the risks that were occurring within Greensill, or what would you say?
Yeah, I mean, I think Lex Greensill himself has said COVID, without COVID, we would have been fine. And I think that's kind of a convenient excuse, really. There had been hiccups all the way for Greensill Capital. And I don't think there's any reason to believe that Greensill Capital wouldn't have blown up at some point. However, it does play a bit of a role, right? So certainly the start of COVID, if you remember, the markets kind of went crazy, and everybody started pulling their money out of anything that wasn't absolutely, the safest thing possible. And so those Credit Suisse funds, there's a bit of a run on the Credit Suisse funds because they're offering like a little bit better than money market funds, but for a little bit more risk. And so money starts to come out of those funds, and that starts to expose some of the cracks in the funds. And, I wrote some stories about things that were going on there that now were revealed by that. And so did some other people. And the result was that Credit Suisse had an investigation into the funds, which started to make investors a little bit nervous. So that was kind of, COVID having a bit of an impact on Greensill. It also obviously had an impact on things like the amount of trade and so on. But ultimately, that was kind of passing. The other big impact COVID had was that, Lex, with David Cameron on board, saw an opportunity. And I kind of was aware of this straight away. As somebody who'd been covering him for a while, I thought, he's gonna spot this a mile off. He's gonna see that there's government money available, and he'll be all over it. And sure enough, he was. And Lex and David Cameron were sort of bombarding Cameron's former colleagues in government with requests for access to COVID bounce back loans and so on. And mostly unsuccessful, I'd say. Like most of the time, people in Treasury or wherever would turn around and say, or the British Business Bank would turn around and say, we don't think you're quite the right fit. But in some cases, they were successful, in particular around some of the Sanjeev Gupta loans. So, there were rules around some of these loans that said no particular borrower can have more than 50 million pounds. So what Greensill and Gupta did was they applied 7 different times under 7 different Gupta businesses and managed to accumulate hundreds of millions of pounds of loans, which when Greensill collapsed became the subject of a parliamentary inquiry, which much of it was still going on, because clearly that was not the intention. So I think COVID, it had an impact certainly on the business. It started to reveal some of the cracks. It led them to do things which got them into even more trouble. But I don't think really you could say COVID was the cause of Greensill's demise. I think really what was the cause of Greensill's demise was him doubling down always on bad loans, and then Tokio Marine taking over this insurance and saying, well, hang on a minute, what are we doing here? It was like a fresh pair of eyes suddenly looking at this business with no real connection to them and not really seeing any upside, and say, well, we're out. And at that point, the whole thing collapses.
Yeah, so I guess what would you say is the fallout? So obviously, Lex Greensill lost reputation, David Cameron to an extent as well, Credit Suisse lost chunk of money. What
Yeah.
else would you say?
Well, I think, yeah, it's an interesting one, because you hope when these things happen that like people will go, oh, well, let's never do that again. The worry is that, of course, it will all happen again, right? And I think the fallout is problematic from that perspective, because I think there are probably a bunch of other Lex Greensills out there doing similar things right now. I mean, there are concrete investigations and so on happening, right? So there have been a couple of parliamentary inquiries into the sort of revolving door between business and government, and whether it's okay for former prime ministers to lobby on behalf of businesses they work for, and there were other people in government who worked for Greensill doing the same. There are criminal investigations in Switzerland and Germany into Greensill, and there's a SFO Serious Fraud Office investigation in the UK into Sanjeev Gupta and his business with Greensill. So those things are going to take years to play out. That's what always seems to happen. And I think when those investigations take years to play out, the momentum kind of gets lost, right? And it's kind of becomes easy to say, well, maybe it didn't really mean to be that bad, and it was just some mistakes they made. So that the outcome from those things is yet to be seen, I guess. I think there have been some movements in the kind of supply chain finance business. So people have started to realize that it's actually quite a big business, and it probably needs some regulation. There've been some new accounting rules issued in the US. I think people will start to look, analysts and so on will start to look a bit more closely at some of the supply chain finance stuff that companies have taken out. But I worry that the implications, there won't be any big concrete effect of this, really. That people like Credit Suisse, who have a really big role to play, essentially, big hit to the bank, and certainly a couple of executives have gone, and the portfolio managers have gone, and that kind of thing. But the bank will just keep going, and it's not really in their interests to speak up and admit what happened, because actually that's kind of embarrassing, right? And this is one of the sort of most disappointing things for me, is like I know that Credit Suisse knows what happened. I know that people at the FCA in the UK know what happened, and none of them really seem to have much incentive to open up and go, well, let's have a real deep analysis of this and make sure it never happens again. It seems like for the most part, most of the people involved feel like they want to, move on and forget about it and hope nobody notices.
Yeah, that seems to be the problem with a lot of these frauds. So, sorry, I just had another question. If we step back, I remember reading something about how potentially a lot of the contracts, I guess, I'm not sure if it's Gupta specifically, but other companies, they would actually say, oh, we have this contract to supply a certain company with this amount of materials, but a lot of them were fraud, or not all of them, but some of them were fraudulent. Was that did you find much of that in your research, or?
Yeah, so there's another piece of this, right? So yeah, there's this sort of traditional supply chain finance, which is okay, but not very profitable, right? So Lex works with Coca-Cola and Boeing and so on, and that's sort of just not a profitable business. Then there's the sort of loans, some of which are to Sanjeev Gupta, some of them are to like Lex's neighbor or to the cousin of one of the managers of the business, and so on. And those tend to be, the Gupta ones are hundreds of millions or billions of dollars, but some of them are 10 million here, 20 million there. They go to kind of friends and family, and now that money's all disappeared. Then there's some other stuff, and some of this is Gupta, some of it's not. And it's what you're alluding to, which is that, as I described supply chain finance earlier, it's about financing real transactions, so actual bits of business that have happened between two companies. What Lex and Sanjeev came up with was, what if I provided you loans backed by transactions that might happen sometime in the future between, companies we might work with, but maybe we're not even working with now. I mean, it was just kind of making up stuff. And they use this to provide loans. And so they take money from Credit Suisse's clients and they'd say, okay, I want to lend Sanjeev another $50 million. Let's come up with $50 million worth of possible transactions that might happen sometime in the future against which we'll loan this money. And it wasn't just Gupta. There was also another company they did this a lot with, which was a coal mining company in West Virginia called Bluestone, which is owned by the governor of West Virginia, a really interesting guy named Jim Justice. And they loaned Bluestone about $850 million, a lot of it done this way with kind of future, Lex would call them future receivables, which is basically made up transactions that may or may not happen at some point in the future.
Yeah, it's when you think about that, it's just mind blowing how they got away with it. Yeah, I compare this to sort of other people I've talked to who've covered similar frauds, I guess Wirecard, RBS, which maybe it wasn't fraud, but obviously was poorly run. And it just seems like from what I learned, there's too much emphasis on this one leader, or there's too much trust in this one leader, and there's not enough control. And at the same time, from investors or from Credit Suisse, there's obviously a lack of understanding about what they're actually investing in and what are the fallout that could occur that we've seen now. So do you sort of see similarities there, or?
I'll pick up on a couple of things. One is on the sort of complexity and lack of understanding. So some of the best investors I knew who I talked to for this, who didn't put money into Greensill, would say to me, well, look, he was offering me kind of money market rates, so similar to what I'd get just putting my money in a deposit account. Essentially, he was offering me a little bit better than that, but in order to get that, I was going to have to read 200 pages of documentation, and so that doesn't make any sense to me. It can't be possible that it's that complex to get something that's not really that much of a return. So I think complexity was like part of the design for Greensill, and some people who were really smart saw through it and said, I'm not going to invest in that. And but some others, maybe could be Credit Suisse, like they liked that complexity and saw, oh, well, this guy must be a genius because look how complex this thing is. And then your other point about kind of buying into the leader, I think is absolutely true here, right? So a lot of people told me he was really charismatic before I met him, and there is a certain charisma about him, but it's one that you either really bought into or you didn't. And for me, I didn't, but clearly a lot of people did. He was certainly incredibly ambitious, worked really, really hard. He was sort of worked almost around the clock. Like if he was on one of his private jets, he'd be working on the private jets, and he worked very, very, very hard. So that impresses a lot of people. He kept a lot of this really tight to his chest, right? Not the unprofitable business with Coca-Cola and Boeing and so on. That was what most of the 1,000 employees were working on. Little did they know they were working on a business that essentially was losing money. Lex himself, with maybe one or two others around him, they were the ones working on Bluestone, Gupta, and the friends and family stuff, and that was held really close to Lex. Was not many people knew about that, and I think that's because they bought into the idea that this guy is a visionary and he's going to change the world forever. And I think once you've bought into that, it's quite hard. Maybe there's I'm not a psychologist, but I guess there's probably like somebody out there could tell us, it's probably quite hard once you've bought into an idea to be able to switch and go, well, actually, I'm not sure about this anymore. Certainly the board members didn't help. They were not really fully engaged. I know actually David Cameron, I'm told, did used to ask a lot of questions, but they weren't particularly insightful and sort of easily fended off by Lex. But some of the others didn't even bother to ask questions. One of them, I'm told, used to be strumming his guitar in the background of the board meeting, so he probably wasn't all that engaged. But I think there's another element to it actually, which is if you look through the board of Greensill, it's an incredibly homogenous group of people. They're like from the same race, the same gender, the same class. A lot of them have worked in the same banks. There isn't much diversity there in any way, any shape or form at all. So the idea that, once you're in this room, be quite unusual once you've bought into it to sort of turn around and say, I've changed my mind. I think this is a big fraud, Ponzi scheme or something like that, if that's what you thought. So yeah, I think that leader thing is really interesting, and how people buy into those people is, it's probably is a thread between Wirecard and Greensill and some of the other big scandals.
Yeah, I think you mentioned as well how a lot of them were paid quite a lot more than they'd be paid at other company. So I guess
That's right.
that's probably a red flag sometimes as well. It's like, why are they
Yeah,
paying me so much?
that's right. They were paying really well. Greensill was renowned. Again, the 1,000 employees, many of them who worked in the northwest of England, they'd probably tell us that they weren't paid that well. But the guys at the top were paid exceptionally well. Much more than they would have been in some of their other jobs. That's another question that comes up quite often, is like, why would David Cameron have joined this company? And that's for him to answer, I guess. But I can certainly say it offered like jackpot money. If it had all paid off, he got paid really well, even though it collapsed, right? So he took out, I think the BBC said £7 million. I wouldn't argue with that number. I think it could have been more. If it had all worked out and they'd got an IPO off the ground, I think he was going to make many multiples of that. So that's one reason why he might have joined. I think there were other things for Cameron. I think it was like a fintech, which was cooler than going to work for a traditional bank and so on. Other people have said to me that maybe he couldn't get a job in a traditional bank because of his premiership. It ended with Brexit, and so that wasn't a great way for that to end for him, given that he'd stood against it. Yeah, so I think you're right. The money certainly. Lex was really good at understanding what motivated different people, whether that was money or whether it was flights on his jet or tickets to a garden party at Buckingham Palace or whatever it was. He was really good at understanding that, I think.
Yeah, which is a fascinating thing. So, Duncan, thank you so much for your time. I guess my last question is, what is one message that you'd like people to take away from the book as well as our interview?
Yeah, there's one thing that's sort of come to me over and over again, and it's that these sort of white collar scandals, it's easy to think that there aren't any victims, and this is all the billions and millions numbers that we throw around suggest, what's this got to do with ordinary people? But in fact, there are victims of this stuff, right? There are 1,000 employees, as I've mentioned a couple of times. They're all without jobs now. They thought they were working for a hot new company, and they weren't. They've lost their jobs, big parts of their career gone. And there are investors in those Credit Suisse funds, many of whom are sort of fairly ordinary people. They're not multi-billionaires. They're just ordinary people who happen to have a bit of money, and they put it into a fund and lost it. And so there are real victims here, and I think it's sort of important that they don't get forgotten.
Yeah, I think that's an important message. So, Duncan, thanks again. So if anyone wanted to buy the book or maybe read more about the work you're doing now, where would the best places for that be?
All the usual online and bricks and mortar retailers. It's the hardback will be out in the US in a couple of weeks as well. So yeah, it's been doing quite well so far. So that's good. Thanks a lot, Anthony.
No, I definitely enjoyed it. I think it's something that it's crazy to think there's always these books about all these frauds, and unfortunately, it just keeps happening. So there's more books, but I think this is it's a really interesting message, and as you said, there's so much involved in it, and it's quite interesting. So, Duncan, thanks again.
Thanks, Anthony. Thanks a lot.
Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.